Every second, millions of trades flash across the global markets. Buy, sell, repeat. But here's what most people don't realize. Over 70% of those decisions aren't made by humans anymore. They're made by algorithms, by machines, by something that doesn't fear, doesn't rest, and never hesitates. While you're sleeping, it's compounding. This is the new investor. Not emotional, not human, just data and discipline. For decades, investing was emotional. People spent lifetimes trying to beat the market, following tips, gurus, and luck. But emotion is expensive. It convinces you to buy at the top and panic at the bottom. Studies show the average investor underperforms the market by almost 4% per year. Not because of strategy, but because of behavior. The market was never your enemy. Your emotions were. It began quietly in the 1980s. Large hedge funds like Renaissance Technologies started replacing instinct with algorithms. They discovered patterns no human could ever see, microscopic inefficiencies buried in decades of data. Machines didn't get tired. They didn't panic when markets dropped. They just executed. By the 2000s, this edge became impossible to ignore. Wall Street went digital, and the rise of the algorithmic investor began. AI doesn't guess. It doesn't day trade on rumors or watch the news. It processes patterns, millions of them, across decades of data. It finds relationships between volatility, sentiment, and probability, and adjusts before humans even realize what's happening. Where we feel hope, AI sees risk. Where we panic, AI sees opportunity. And when we stop watching, it just keeps working. Let's test it. Imagine two investors start with the same $1,000. Investor A checks the market every day, buys the hype, sells the dips, feels in control but isn't. Investor B sets up an AI-driven portfolio, automatically rebalancing, reinvesting, optimizing. 10 years later, Investor A turns $1,000 into $1,800. Investor B turned it to $2,700. One chased returns. The other let technology do what humans couldn't: stay consistent. But here's the paradox. Even when faced with proof, people still hesitate. We fear losing control. But that control is exactly what's keeping most people broke. AI doesn't replace human intelligence. It replaces human inconsistency. The best investors of tomorrow won't be smarter. They'll simply trust their systems. AI investing is no longer reserved for billion-dollar hedge funds. Today, everyday investors have access to robo-advisors like Wealthfront, Betterment, and Tyker, tools that balance portfolios, track goals, and reinvest dividends automatically. These systems aren't guessing. They're learning, improving with every market movement. The edge used to belong to the few. Now it's available to anyone willing to use it. For thousands of people, AI investing has already changed their lives. It's not about getting rich fast. It's about never stopping your progress. From students investing $5 a day, to parents building portfolios for their children, to people who simply decided, I'm done letting my emotions cost me money. The 2008 crisis wasn't just financial, it was psychological. Billions were wiped out overnight. Human emotion reached its breaking point. But while fear froze millions of investors, algorithms quietly kept buying. Those who trusted systems recovered faster. Those who trusted feelings never recovered at all. We're witnessing the greatest shift in financial power since the creation of the stock market itself. The tools once reserved for elite traders are now democratized, accessible to anyone with a smartphone. The AI investor isn't a Wall Street insider. It's a teacher, a student, a freelancer, a builder, anyone who's ready to let automation work while they live. The AI investor is more than a machine. It's a philosophy. It's the belief that wealth doesn't come from prediction. It comes from patience, from removing emotion, from building systems that never sleep. The future investor doesn't hustle harder. They automate smarter. Ignoring this shift won't stop it. The market won't wait for you to adapt. Those who resist automation will spend their lives working harder for smaller returns. Those who embrace it will quietly build freedom while everyone else is still checking prices. 2030, AI-managed assets could exceed $20 trillion. This isn't theory, it's momentum. Machines are rewriting how money grows, globally, invisibly, relentlessly. The greatest investors of the next decade won't be in suits. They'll be people who simply understood one thing: automation is the new compound interest. So where does that leave us? Our role isn't to predict or time the market. Our role is to design systems that protect us from ourselves. Technology doesn't replace ambition, it frees it. The AI investor doesn't eliminate humanity. It allows us to be human again. The future of investing is already here. It's efficient. It's consistent. It's emotionless, and that's why it works. You can ignore it, or you can let it work for you. Because the rise of the AI investor isn't coming, it's already begun. Now you invest. Like and subscribe for the future of wealth.